They don't have something akin to what OpenAI has with ChatGPT or Gemini from Google. But as you reported, right, this was a team of 2,000 people working on the Apple Car. At one time, it was nearer to 5,000. And unfortunately, some of those people will lose their jobs, but they'll be shifted to generative AI. And it speaks to the types of people Apple hired, which was, for in many cases, computer scientists, right? There's a high degree of crossover between the work in autonomous driving, in training neural networks for that, and the work that goes into large language model development and the inference side of generative AI.
All right, Ed, really appreciate your reporting as always. That, of course, is Bloomberg's Ed Lowe. Much more coverage coming up on Bloomberg Technology. But before we get there, let's welcome back Cameron Dawson. She is NewEdge Wealth CIO. And Cameron, I know that you're overweight tech, but let's get specific here. Talk to me about software versus hardware and how you're viewing that.
Yeah, I think the first start is just respecting the technical trends. Hardware has been really breaking down. A lot of that is Apple. You've seen a really strong rollover of its relative performance, which is pretty eye-popping. And a lot of it we think is because you saw hardware do well last year, not because earnings had a lot of upside, but because of valuation expansion. So without an inflection in earnings, hardware will continue to struggle. On the software side, we are seeing better technical trends as well as earnings trends, and we're seeing a lot more activity within M&A as well. So within software, the one thing we'd really like to see is those users and appliers of AI see better upside to their earnings estimates. It's pretty shocking. A name like Microsoft over the last year has only seen its earnings estimate for 24 and 25 go up by about 8%. It is a big ship, it's a behemoth, and so even Copilot may not move the needle that much, but given all the buzz around AI, we'd love to see a bigger inflection within earnings estimates, at least in the out years, to get a reflection of how it could move the needle.
Well, that's the Microsoft story. Tell me about Adobe, because I was talking about forgotten children with Bailey. When it comes to AI, it feels like Adobe is often overlooked here.
It is, and the thing is, it has been applying AI in incremental steps for years and years. I still remember using Photoshop and having to manually cut out pictures, and now you can do it in just a click of a button. But overall with Adobe, it has sold off, it is oversold, and it's still in an uptrend. And so given the investments and the applications in AI that it has, we're still optimistic. However, again, we'd like to see a bigger delta on those earnings estimates. They've stayed pretty static over the last 4 months, and so a lift to earnings estimates likely is the catalyst to get the stock moving again.
Well, Cameron, I mean, in NVIDIA, of course, you are seeing all this AI enthusiasm really materialize in their earnings. But when it comes to some of these software names, is that AI still a margin compression story at this point? When does this actually translate into some hard numbers when it comes to the bottom line?
Yeah, it's the field of dreams. Build it and they will come. And it's always important to remember with the semiconductors or any kind of other CapEx supplier is that one person's sales, being the semiconductors, is another person's CapEx, being these software names. And so what we're starting to see is talk about how they can convert it into revenue, but it's not yet showing up in numbers. It may just simply be too soon, which just means that direct AI exposure outside of just multiple expansion and the hope that it converts into numbers is still really just within the semiconductor names, those that are providing the picks and shovels to make all of this happen.
And I mean, you point out in your notes that semis, they're a pretty cyclical sector. Does a name like NVIDIA defy that, given all the hype and promise around that specific name right now?
I remember back a few years ago, I think it was 2017, 2018, when we all talked about how semiconductors weren't cyclical because of the Internet of Things and because we were putting chips in everything. The reality is this is a cyclical industry, and eventually there will be a down cycle. The thing is, we don't see that happening yet. If you look at overall sales for the semiconductor index, they remain below their 2022 peak. And we do think that you're starting to see an uplift in a broader semiconductor cycle, not just within AI, but in other industrial and auto applications as well, which just means that there's probably still room to run. But to your point, with cyclical stocks, the stocks will price in a peak long before it happens from an earnings or a sales basis. So we should stay very disciplined and not think that everything can grow to the moon, remembering that things are yet very cyclical.
All right, Cameron, really enjoyed this conversation. Really went around the world, too. That, of course, is Cameron Dawson. She is New Edge Wealth CIO. Now, still ahead, we're going to take a look at the companies making the most social buzz today. That's in our Social Climber segment up next. This is Bloomberg.
Great questions.
All right, time now for Social Climbers. Look at the stocks making waves on social media this morning. And first up, Virgin Galactic reporting fourth quarter revenues that fell short of expectations. The space tourism company working to rein in costs and also to slow its launch schedule. Now, these results highlight the slow but steady path to establishing a routine cadence of space flights for paying customers, but shares currently off by quite a bit. Next up, Beyond Meat finding success beyond the U.S. The fake meat manufacturer topping earnings expectations thanks to international demand, particularly in Europe. The company has been trying to boost weak domestic demand by cutting prices, offering discounts, and eliminating jobs. The stock also had a massive short interest heading into this report, which might explain why shares are currently up about 44%, quite staggering there. And finally, no cheers here. Boston Beer, of course, that's the brewer of Sam Adams, reporting a decline in revenue thanks to significantly lower shipment volumes. The CEO of the company also announcing he will retire next month after 5 years at the helm. And of course, you can follow all the latest company buzz on TREN Go on your Bloomberg terminal. Now you take a quick look at the markets here. And again, we are on the back foot. You take a look at the S&P 500 off by quite a bit. And then you take a look at Apple, also down about 0.7%. TJX rising. United Health down about 5%. Now coming up, Gone Cruising, more Americans taking to the river. We're going to talk to Charles Robertson, American Cruise Lines President and CEO, next. This is Bloomberg.
everything.
Well, one stock we're keeping an eye on is Norwegian Cruise Lines. It reported earnings after the bell yesterday and shares extending gains after surging 20% post-results. Natalia Konijevic has more.
Katie, so the stock posted the biggest gain since 2020. It was the biggest gainer in the S&P 500 yesterday. So results for the last quarter were largely in line with expectations, but guidance was very optimistic. So let's break it down. So here's a chart showing the stock price, but this is the forecast for the first quarter. Adjusted EBITDA, 450 million versus expectations of 329 million. Occupancy also above expectations. Adjusted EPS, that was interesting. The company expects 12 cents in the first quarter. Analysts expected a 20 cents loss. So at the same time, the management was very bullish in terms of demand, but they highlighted lots of uncertainty related to the Middle Eastern conflict, and they canceled or redirected cruises to Israel or the Red Sea. And as many travelers see this uncertainty around the world, they prefer to travel domestically, and river cruise lines can be an option for many of those passengers. This segment is growing very quickly. This chart shows that from 2022 to 2023, this segment is expected to grow by about $3.2 billion until 2027. There are many reasons, again, for customers to choose domestic cruise lines and river cruise lines. So companies are upgrading capacity. They are adding amenities such as spa treatments or golf courses. But I would say maybe one of the biggest reasons for travelers to choose river cruise lines is easy travel, hassle-free. And if we break it down by ages, we see that 56 years and above, this is the largest group that prefers river cruise lines. But Katie, as we can see, younger groups are also gaining more share when it comes to river cruise market. So definitely a segment to watch.
All right, Natalia, thank you so much. And let's keep on cruising with Charles Robertson. He is American Cruise Line's president and CEO. Of course, it's domestically focused, both rivers and some ocean routes around the U.S. as well. So, Charles, we know that 2023 was a big year for cruising on the ocean. How is business on the rivers?
Thanks for having me on, Katie. Business is very strong on the rivers. We see the strength we see in the cruise industry generally translates across all market segments. And in the river business, we see very strong demand for domestic products, very strong demand for exclusive products, and a growing trend among baby boomers and our most mature customers to be traveling with us.
And so I want to talk about expansion here, because I know you're adding at least 5 more ships to that fleet. That fleet has already tripled in the past couple years or so. Are you adding more river routes as well, or what kind of thinking goes into that process?
We are. Domestic river cruising is still very nascent, and we've about tripled our fleet size in the last 5 years. We have 5 more ships under construction right now, and we have the best rivers in the world right here in the U.S. And so while the segment is still growing overall, the majority of the growth and the fastest pace of growth is domestic travel.
Well, I want to talk about pricing here, because if I wanted to take your 10-day, 9-night historic Mississippi River cruise, that would cost me about $3,700 or so. So that isn't something you necessarily book on a whim. What kind of decisions go into pricing? We talked to a lot of retailers, for example, that have been forced to raise their prices. What do the inputs look like on your side?
It is a premium product. But the value of cruising has, compared to land-based options, has never been higher. And so over the past few years, I mean, cruise industry fares have risen at single-digit rates compared to hotels and other travel options that have risen at double-digit rates, or in some cases even up 30-40% or more. And so the value of what a river cruise provides has never been higher. And it's one fare you get to set, and then you're on board and you have a comfortable experience that can visit as many as 10 states in as many days.
And Charles, like you said, this is a premium product. And along those lines, I'm wondering what sort of trends you're seeing around booking. For example, are these trips that people book out far in advance? Are you seeing that time increase?
It is. What we're really seeing is a flattening of the booking curve. And so it's not quite barbelling, but it's moving further and further out to the sides. And so we have a lot of very close-in bookings and a lot of much further out bookings. And that's created a lot of pricing power as we set our prices for the future and we understand what the demand looks like.
And I am curious about how much more consumers spend once they're actually on board. Once they're, buying food, they're buying alcohol, maybe they're buying spa packages as well. What is the breakdown that you get versus the onboard spend versus, say, how much they're actually paying for a ticket?
For American Cruise Lines, we have actually